Hi, I'm Luciano Siracusano, WisdomTree's Chief Investment Strategist. Today I'm going to take a few New York minutes to discuss what we've seen over the past decade dividend weighting the U.S. equity market. We'll discuss briefly how WisdomTree does this, why we do it, and some of the real-time results over those 10 years. Feel free to pause this video if you'd like to drill down further on any particular slide. Historically, dividend per share growth on the S&P 500 in blue has compounded at 5.7% per year since 1957, outpacing inflation, denoted here in orange. This growth of dividends is one of the forces that drives the stock market higher over time. WisdomTree built on this insight when it chose to weight equity markets based on each company's contribution to this aggregate dividend stream. Let's look at exactly how we do this. Rather than weight stocks by their market value, WisdomTree typically weights by the income companies generate. In our broadest U.S. dividend index, which measures the performance of more than 1,400 dividend-paying stocks, WisdomTree sets the weights once a year based on the total amount of the regular cash dividends companies pay. This gives WisdomTree ETFs a chance to rebalance annually back to a measure of relative value. This may also help us avoid some of the risks associated with cap-weighted indexes, which are vulnerable to overweighting overvalued stocks and underweighting undervalued ones. One of the benefits of dividend weighting is that it typically raises the starting dividend yield on the market. Shown here in green are the dividend yields of the underlying indexes for WisdomTree's domestic dividend ETFs. Shown in orange are the comparable value indexes, and in black, the comparable market cap weighted indexes. You can see that WisdomTree's dividend yields are all north of 3%. This is important because dividend yield is a key contributor to your total return. Weighting by dividends tilts portfolios away from the lower yielding stocks towards the higher yielding portion of the market. As this slide shows, research conducted by Wharton professor Jeremy Siegel demonstrated that the two highest dividend yielding quintiles of the market, shown here in blue and red, beat the overall S&P 500 by approximately 2 percentage points annualized since 1957. This slide shows you the performance of WisdomTree's U.S. dividend-weighted ETFs in real time over the last decade. A few key takeaways. WisdomTree's mid-cap dividend fund, DON, its small-cap dividend fund, DES, and WisdomTree's high dividend fund, DHS, all beat their comparable cap-weighted benchmarks over the last year, the last 3 years, the last 5 years, and the last 10 years. In fact, over the last 5 years, all three beat 99% of the actively managed mutual funds and ETFs in their respective Morningstar categories. And this impressive performance occurred during a decade when growth stocks beat value stocks in the U.S. Now, weighting by dividends may also help to reduce volatility. For example, over the last 5 years, the beta or market risk of the WisdomTree ETFs has ranged between 0.66 and 0.84 relative to their benchmarks. So over this period, WisdomTree was able to generate not just higher total returns, but higher risk-adjusted returns relative to traditional indexes, all while correlating closely to the established benchmarks. Finally, dividend weighting squeezes more dividend income out of the market. In red are the actual dividend distributions at the fund level of DTD, which tracks our broad WisdomTree dividend index. You can see here how an initial hypothetical investment of $1 million made at the end of 2006 generated nearly $35,000 of dividend income in 2015. That compares to the roughly $22,000 in interest income that would have been generated by the same investment in a 1 to 10 year Treasury bond ladder, denoted here in blue. To conclude, WisdomTree believes investors can use these dividend-weighted ETFs in the core of their allocations as complements to traditional beta exposures or as replacements for more expensive or underperforming actively managed mutual funds. While we have focused here on the U.S. offering, WisdomTree offers a similar approach across similar size segments in both the developed and the emerging markets. Whether you're investing for total return, for income, or trying to reduce some of the volatility of your equity exposure, WisdomTree's dividend-weighted ETFs have broad applications. We invite you to visit our website and learn more about our approach. And we encourage you to explore the core of your portfolios with WisdomTree's dividend-weighted ETFs. Thank you.